November 10th, the market update desk, Scott Riley and Mortgage One. Well, we're getting ready to go into the weekend. We are coming to the end of a much more tame week than what we had last week, and we're very thankful for that. We did stay fairly even throughout the whole week. We did have some volatility yesterday that we're going to go into here. And by the way, this is Veterans Weekend. We do a Veterans Day on Monday that's observed. If you see a vet tomorrow, shake their hand, tell them thank you. They've given us the opportunity to do everything that we do and fought for that. So today, late yesterday, we had a 7-year bond auction. That was actually one of the weakest bond auctions we've seen in a long, long, long time. One of the strange reasons was normally we do get a lot of Chinese purchasing of the 7-year bond. They actually had a hack on their system, a cyber attack, and they couldn't trade during the trading cycle for the 7-year bond. And it did give us basically a grade of a D minus on the 7-year bond, which brought down the gains that we had gotten earlier in the day in the bond market. Yesterday, we also had our wonderful friend, Michelle Bowman from the San Francisco Fed, open her mouth. And of course, as we've talked about, she's an attorney, not a trained economist. So we look at her comments and really shake our head. She talked about wage growth expanding and the concern about it, yet she didn't make note whatsoever of the hourly earnings decrease on monthly and weekly basis, and also the average hours worked on a weekly basis decreased. In addition, she kept trumpeting we need some rate hikes, and she talked about the real estate market is extremely strong right now. Yes, it's very strong, but we have a limited number of buyers, and a lot of loan officers and realtors are exiting the business, or they're going to be planning on exiting it. So she's trumpeting things she's not following the data on, which is one of the things they talk about. We're going to follow the data. Once again, this is what happens when you have attorneys involved in something that should be fully trained, high-end economists. Also, Fed Chair Powell spoke yesterday, went extremely hawkish. Now this morning, he started to backtrack it. And we've talked about it. He's an attorney also, not an economist. So we're getting comments and commentary, discussions from people that have very strong voices and affect markets that are attorneys, not economists. We've talked about it before, but I want to go over it again. So they had a negative effect on the market as we ended yesterday. Today, we are starting to recover a little bit of that. We crossed over 4.6 in the 10-year bond. We tested a very important resistance level, and we're trading in a very tight range between a Fibonacci level and a 50-day moving average. So it's a very tight range. We're hoping we can break below that, get some momentum going for lower rates again. Same thing for mortgage bonds. One of the reports today was University of Michigan consumer confidence. 4th month in a row, we saw an erosion of consumer confidence. So that did help the 10-year bond a little bit today. Next week, we do have another busy week. We're going to be sharpening our pencils again starting Monday in anticipation of a very busy week. We've got CPI and PPI next week on Tuesday, Wednesday. Then we have jobless claims on Thursday. I think we're going to continue our pathway to some better market here with the 10-year and the mortgage-backed securities. The interesting thing also, Fed member Bowman, she talked about higher energy prices as a concern. But wait a minute. In the last month, we're down about 15% on WTI crude oil and Brent crude oil. So that's been a reduction in energy prices. Where's she getting her data from? This reduction hopefully will flow through to those CPI and PPI reports next week. So we'll be very active, very busy next week. Hope everything's going well. You have a fantastic weekend. Thanks so much. Scott Riley at the Market Update Desk, 616-293-2189.